Hello and welcome to another update video about Polkadot. The dot chart is in its same unchanged posture. So we have a 5-wave move to the upside, this initial 5-wave rally, which I call a leading diagonal, where the wave 1 topped at around $12 in March. And then we have this very, very complex correction. I've labeled it a WXY structure. It's possible it's something different, but this works actually quite well. These are very rare corrective patterns, so obviously we have to be on the side of caution. And so far we don't have a reversal signal that is convincing. However, we're now in the region, obviously, from where we expect a reversal. And what we're doing now is watch the smaller time frame to understand if we get a first reversal signal, so that the larger degree assumption, the thesis that this is a possible uptrend, okay, 5 waves up, 3 waves down, that this is really valid because there is a larger degree thesis, larger time frame thesis, overall assumption, but the smaller time frame needs to confirm that. How can it do that? Well, it can do that in a way, or basically it can do that by flipping bullish as well. So if the smaller time frame count, smaller time frame chart, which is currently still bearish, flips bullish, we have alignment on various time frames. That's pretty positive. So looking at the 1 hour time frame, first of all, we can see that the critical support level for a wave 2 is at $4.60. Any break below it will seriously reduce the likelihood of any bullish follow through. I mean, we've seen that example on the Matic chart. Matic broke that 78.6 retracement, I think, well, many weeks ago at least. Don't know, maybe even months ago, but many weeks ago. And that break of support was an initial warning, and then we had invalidation. That's how valuable these support levels are. They give us an early warning. But the $4.60 level still needs to be considered. So as long as we're holding above it, I can maintain the idea that this is a 1-2 setup. We're currently in a wave 2. Yes, we're very low in the support region, but now we've seen a reaction as well. So this is going to be interesting going forward. Still, though, we need to make sure that this 460 level holds. Well, if it doesn't, then, okay, the market alone will decide that, but then the likelihood for bullish follow through will reduce. So at the moment, the short-term price action is still bearish. I'm actively watching all these charts for possible reversal patterns. On the dot chart, what do I need to see? Well, I need to see a first 5-wave pattern. The initial resistance area is between 571 and 622. A break above 622 would help. This is already a potential 5-wave move up, but I have to say that the third wave is a little bit weak. The third wave didn't reach my first ideal target. Okay, so if I look at this, it looks like a 5-wave move up, yes, but this here looked also like a 5-wave move up. 1, 2, 3, 4, 5. This was the rally that topped on the 2nd of July. There were several problems with that rally, if you recall. What would have been a third wave was too weak. The fourth wave was a bit too deep, not to be valid, but to be reliable. And the fifth wave also didn't reach the levels that it should have reached. So it was all not great, and it just overall had the look of a corrective structure. This here is quite similar. It's a bit better. But this third wave was a bit too weak. Okay, if I look at Fibonacci extensions, we take the length of that wave 1, we go to the low of the wave 2, and you can see it didn't reach the 1.38 extension again. It missed it, well, okay, maybe it just about reached it. I think it depends a little bit on, let me just double check that. Maybe it did reach it. No, it missed it by just a little bit, yeah. Okay, you could say, there's, obviously, it depends a little bit on the exchange and so on. But then you see the fifth wave also didn't reach the 1.618 extension. So I don't consider that a reliable 5-wave pattern, okay? It's possible, it's valid, it's not reliable. It's more reliable if we get basically another 4-5 pattern, okay? Because then I have a more clearly defined 5-wave move. So that means ideally one more 4-5 pattern, which means initial micro support is, so that just means this is the support area that now needs to hold to give us one more high. It's 561 is the key level there. So as long as it's holding 561, there's a chance for one more high in an impulse, okay? Okay, what happens if it breaks below 561? Well, that increases the likelihood for another low, but we could still watch the lower support region in case there are already 5 waves. They're just not clear. But still, in that case, then the price should hold the 78.6 retracement at $5.15. That's the lower micro support. Okay, so there's upper support here is relevant for one more high. And below that level, we have 515 to 532 as critical range. Okay, basically, if it breaks below 561, we could still watch for a corrective pullback. Okay, so assuming, okay, maybe in that case, then all 5 waves completed. And then we can call that a wave 1. We can still watch for wave 2 support, but I wouldn't rely on it. Yeah, it's just, okay, you know, first warning, if we break below 560, second warning if we break below 515, that a new low is coming. Until then, let's say there's a chance. Okay, this is obviously very, very early days in the possible trend reversal. But this is sort of the stuff I'm observing. And then obviously, if we zoom out a little bit, the descending trend line here, or the wedge pattern, is going to be relevant. This has now 3 touch points, this trend line, 4 touch points. So a break above this trend line could be an additional signal that a reversal is actually happening. That's the update about DOT. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.